I made $3,700 in just 45 minutes from day trading, but to be honest, this could have easily been a 15k or 20k day. To find out more, watch this video till the end because I will be doing a complete breakdown of what happened on this day, what you can do to avoid FOMO, because fear of missing out, FOMO, is very common in day trading. My very first trade right off the market open on this day was on Amazon, because Amazon has been consolidating in this channel for a very long time, for the past I would say 2-3 months. On this day, that is 10th of January, a Monday, start of the second week of 2022, Amazon was gapping down. Amazon made a pre-market low of around 3205 level, and we already know that $3,200 level is a critical level on Amazon. So I was watching the break of pre-market low if I can get a pullback entry to the VWAP for a break of 3200 towards the downside. So here's the 1 minute chart of Amazon from 10th of January 2022. As I broke down on the daily chart, Amazon was breaking under a critical channel on the daily chart on higher time frame. So now we have to focus on the lower time frames for our entries and exits. You guys can see right here, Amazon made a pre-market low of around 3205, a pre-market high of around 3240. Right at 9:30 a.m., right within the first 1 minute, Amazon made a doji. I tried to get filled on the next minute. I placed my order to get filled 10 contracts, but I only got filled 1 contract because I was trying to chase the mid price because the spreads were very wide. But before we jump on to my entries and exits, let's take a look at SPY, because SPY was also selling off right at the market open on this day. On 10th of January, you guys can see SPY made a doji right within the first 1 minute, and then we saw a clean sell off in the overall market, a flag pattern, another sell off, another flag pattern, a sell off again. So SPY was in a downtrend for the first 1 to 2 hours of market open, and that's why I was liking Amazon for downside. Before we jump on to my entries and exits on this trade, it's very important to understand why I was trying to get filled on the mid price. So I have paused this recording. Let's now focus on the option chain. I was trying to get filled 3200 puts, and the bids are at $38 and the ask is at $45. That means the spread is around $700 each. So if I pay the ask price for 10 contracts, or if I place market order, I will most likely get filled at the ask price. That means if I'm buying 10 contracts and if this is a loser trade, I will at least lose $7,000 on this trade because the spread is itself $7,000. Worst case scenario, I will end up losing $10,000 on this trade. And that is why I was trying to get filled on the mid price, and eventually I missed a really good trade in my favor. So let's now play this recording, and you guys can see I placed my order to get filled when Amazon was around 3205. It was about to break the pre-market low, but I only got filled 1 contract out of the 10 contracts I placed the order for. My fill price was 43.18. After getting filled 1 contract on Amazon, I will try again to get filled 3 more contracts, but unfortunately I won't be able to get filled because again I'm trying to get filled on the mid price. If you still look at the bid and ask price right here, the ask is around $47 and the bids are at $42. I missed my fill on this trade, and then it moved straight towards the downside for the break of 3200. I will exit this position within the same minute at a fill price of 49.07, overall making around $600 on this trade. But the exit was not because I saw any buying pressure. The only reason was that I only had 1 contract. I was also liking Tesla at that point, and you guys know, if you guys have been following me for a while, I don't take 2 positions at the same time. So holding on to 1 contract was not worth it because I was also liking Tesla at that point. So my thinking was that I can maybe look for a pullback entry on Tesla and take my usual position sizing on that trade instead of holding 1 contract on this trade. I just forwarded this recording by a few minutes, and you guys can see my FOMO was real on this trade. The same 3200 puts are around $61 each. So if I would have gotten filled all my 10 contracts on this position, this was approximately at 15-20k trade easily in my favor because we never saw even a single green candle. It's straight selling off right off the market open. So that's why my FOMO was real, but I always say that as a day trader, you will have emotions, you will have fear of missing out. There's no other way to go about it. But what you need to do as a day trader is to not act on those emotions. And you guys can look at my order window. I did not place any orders on Amazon because I knew that Amazon is extended. I missed my really good entry. So if I take a position now, yes, it might work out in my favor, but it's not a good habit to have, because if you chase a stock, the one time it doesn't work out in your favor, you can just blow up your account. That's why I just don't want to get into a habit of chasing a stock. And when I noticed that I'm having FOMO, I just took a back seat and I did not even trade Amazon for the day. So after having major FOMO on Amazon, I just decided to stop trading Amazon, and then I started focusing on Tesla, because Tesla was also having good price action for the first 10-15 minutes, but then it got choppy a bit later in the morning. On the daily chart of Tesla broke the $1,000 level in the pre-market itself. Based on the daily chart, we have 1,000 critical support that is underneath us. Then we also have the 980, which is a very critical support on Tesla. So I was watching these two levels for a break towards the downside. Before we break down this trade on Tesla, pause this video, give this video a thumbs up, because it helps out the channel a lot to reach new traders out there. If you are new, subscribe to this channel and hit the bell notification, because I'm releasing 2 to 3 new videos on day trading every single week. So here's a 1 minute chart of Tesla from 10th of Jan within the first 15-20 minutes of market open. You guys can see we had one green candle. Tesla failed to hold above $1,005-$1,008 level. Then we saw a sell-off, a break of $1,000 level. Then on this candle, what I saw that Tesla pulled back to around $990 level, and then it got rejected from $990 with a lot of selling pressure on the time and sales. That's why I just knew that this $990 to $995 is a critical resistance. We also have the VWAP right here. So after seeing the rejection on this candle, that gave me a trade idea that if it comes back around 990 or 995, I will get into puts for a break of low of the day towards the downside. Let's now take a look at my entries and exits on this trade. Here's a recording of my trade on Tesla. As I mentioned, we got rejected from 990 at around 9:36, 9:37 a.m. candle. Then on the next pullback to 990, I placed my order to get filled. I got filled 15 contracts. I'm trading 980 puts, and my fill price was 32.56. And to be honest, the fill price is not the best. I should have paid the mid price on this trade, but I paid the ask price, and the fill price was very bad on this trade. After taking this trade on Tesla, my stop loss on this trade was a break and hold of this pre-market low. This dotted line is the pre-market low. Tesla broke the pre-market low, but it never closed above pre-market low. My initial stop loss was around 992, 993, but I gave it room to 995 because the overall market was also selling off. And I also knew that we have VWAP on top of us. To be honest, because of the bad fill, I was also down around 10-15% on this trade. So the risk to reward wasn't the best on this trade. On the other hand, if we would have seen a clean push towards the upside on the Qs and SPY, I would have for sure exited my position. And that is the reason why you have to adapt to the market conditions and think on your feet as a day trader. So just before the break of low of the day right here, Tesla made a flag pattern. There was a huge order at 980, and that order was having a lot of difficulty getting filled. That's why when I saw that we are seeing a bounce from 980, I covered 5 of my contracts at a fill price of 35.77. I'm still holding 10 of my contracts just to see the break of 980 because the market was still looking very weak. So Tesla held this $980 level very strongly. We saw a push towards the upside. I covered another 5 contracts at a fill price of 34.16. I was holding my last 5 contracts, and you guys know my exit will be at break even. And when the premiums came back to my entry point around 32.65, I covered my whole position. Overall, I made $2,500 on this trade. So if you look at risk to reward perspective, I think it's 1-to-1, so not the best risk to reward. Now this is my last and the final trade of the day, my third trade of the day. Tesla was comparatively stronger than the overall market. Qs were selling off, SPY was selling off, but Tesla made a triangle, then it broke towards the upside. And as I mentioned on the daily chart, 980 is a critical support on Tesla as well, which it held earlier on in the day. The low of the day is $980 level. Triangle broke towards the upside, and this $995 level was acting as support now. And that is the reason on the pullback to $995 just before the break of $1,000 level, I placed my order to get filled. I got filled 10 contracts. I'm trading 1010 calls, and my fill price was 29.65. My stop loss on this trade is 995, and my profit target is a break of 1010 towards the upside. So this is at least gonna be 2-to-1 or 3-to-1 reward to risk ratio, which is amazing. After my entry on Tesla broke $1,005 level towards the upside. The premiums came around $33, so that means I was up around $3,500 on this trade. but I was expecting the break of 1010 because Tesla was looking really good for a break towards the upside if the market finds any support. So what I mean by support is that the market was selling off, SPY and Qs were weak towards the downside, Tesla was holding strong. So if the market finds any support now, there was a really good chance for a squeeze towards the upside on Tesla, because people who went short right here for the break of 980 and low of the day, they will all get stopped out and we could see a clean push towards the upside, because people who short it, they will have to buy back their position. So that creates more buying pressure. But because the market was looking weak again, the market continued to sell off towards the downside, I had to exit my position with a small profit of around $600 on this trade. Even though I made $600 on this trade, I will consider this trade as a break-even trade, because my plan on Tesla was that Tesla is holding stronger compared to the market. If the market finds any support, we might get a rally on Tesla, but because market continued the push towards the downside after giving a small pullback, I covered this position, yes, with the profit, but I will personally consider this trade as a break-even trade. Let's now take a look at my PNL, and before we do that and before I forget, if you guys want to be part of our Discord group, get access to my daily game plan, learn from me, learn from our webinars, our education center, learn from other members of our community, we have a discount code at the moment that is only valid for the next few days. That code will be in the description box below, along with the link to sign up for our Discord membership. So this is the perfect time to make use of it. So now let's jump on to my PNL. I made $587 on my Amazon one contract trade, which could have easily been 15-20k a day. And then I made Tesla $650 towards the upside, and then I made $2,500 approximately on Tesla towards the downside, overall ending the day with around $3,700 in the green, which is good but not the best, because I did make a few mistakes on this day. So first, coming to the good things I did, I think I was able to manage my emotions really well. Yes, I did leave $15,000-$20,000 on the table on Amazon, but it's better to not to chase a stock, because as per my experience, it just takes one bad trade when you chase a stock with big size to blow up your account. I have had my biggest red days by chasing a stock. So that is a very bad habit to have. It's better to not to chase a stock. I'm okay leaving $15,000-$20,000 on the table than to get into a habit of chasing a stock, because that's a no in day trading. It just takes one bad trade to blow up your account. I always keep that in the back of my mind. Now coming to the bad things I did, I think I was a bit hesitant after missing out on that Amazon trade on taking any more trades. For example, if you look at that Tesla trade, that was not the best trade in the world. The risk to reward was 1-to-1. So after missing out on Amazon, that's a good thing. I did not act on my FOMO, but I was also hesitant in taking any more trades on different stocks as well. So something to work upon in future. And that's the beauty of day trading. You find your mistakes every single day, and then you have something to work upon every single day. It never gets boring. That's it, guys. But before you go, make sure that you guys give this video a thumbs up. It helps out the channel a lot to reach new traders out there. And if you're new here, subscribe to my channel, hit the bell notification, because I'm releasing 2 to 3 new videos on day trading every single week. If you guys don't follow me on Instagram, follow me there, because I post a lot of good day trading content, behind the scenes of a day trader, my green days, my red days, trading motivation on Instagram. The link will be in the description box below. Thank you for watching, and I will see you guys in the next video.